Bank of England to stop government bond buying scheme today. Pressure on gilts, UK government bonds, eased on Thursday as the Bank of England sought to steady market sentiment by increasing its bond buying activity. The Bank of England is set to stop its government bond buying scheme today after attempting to reassure the UK's financial markets. The bank launched the unprecedented intervention after the Chancellor's mini-budget caused chaos within the markets, as well as a potential pension pots crisis. It promised to buy up to £65 billion in government bonds, which are known as gilts, from those who wanted to sell them. The government issues bonds to raise money for public spending, often used to service pension funds and the life insurance market. Banks and big financial institutions that buy the gilts from the government at auction can sell them on to smaller financial institutions, traders or investors on the open market.
Has fallen to its lowest level ever against the US dollar.
The price, or rate, at which they are bought and sold will be higher if investors think the government is able to repay the debt when the bond matures. But when confidence in the UK economy falls, so does the bond price. This increases the yield, the rate of interest or cost of borrowing, as investors seek to protect their money. How much did the BOE spend on bonds? Advertisement. The scheme launched by the Bank of England was designed to restore confidence in the government's finances, increasing bond prices and decreasing the yields it has to pay on them. Initially, the bank's intervention seemed to push down yields on these gilts. But on Wednesday, yields had surged as high as 5.1%, the same level they reached before the bank's initial intervention. As part of the program, the bank bought around £4.35 billion of bonds on Wednesday and £4.7 billion on Thursday in an increased effort to help soothe the markets.
It brings just like the retailers buy milk at a cheaper rate and sell it to the customers at a higher rate, even power companies.
Ultimately, it has helped to prop up pension funds at a time when they were already under a lot of strain from global financial pressures. Another U-turn expected. Chancellor Kwasi Kwarteng and Prime Minister Liz Truss are now under pressure to reinstate a planned increase in corporation tax from April. On Thursday night, the Chancellor announced he would be returning to the UK from the US earlier than planned, amid growing expectation of a government U-turn on corporation tax. The widely anticipated move appeared to reassure the finance industry, after Bank of England Governor Andrew Bailey spooked the markets by insisting that the emergency support would not be extended. Mr. Kwarteng has also that there would be no real cuts to public spending, appearing to double down on comments made in the House of Commons by the PM on Wednesday. The government's plans revolve around securing an increase in economic growth, with a target of an annual rise of around 2.5% in gross domestic product. The crucial date will be October 31st, when the forecasts presented by the Office for Budget Responsibility alongside the Chancellor's statement will give an assessment on whether such a plan is realistic.
When a gold bar arrives at the Bank of England, there are some checks that we carry out. The London Bullion Market Association, the LBMA, set the rules to define what bars will be accepted at all London gold vaults. This is called the London Good Delivery Bar. A London Good Delivery Bar must be at least 99.5% pure gold, with markings of who produced and tested the bar, the refiner. We use an ultrasound machine to scan the gold. The machine uses ultrasonic waves to find out if the bar is damaged or has any holes inside. If the gold bar passes these tests, it will be accepted into the vaults. If it doesn't, we will reject it and it will be returned to the refiner who produced it. We will then weigh the bar and give it its own unique Bank of England number. And now, our final destination, the vaults. We store the gold bars on reinforced pallets made out of metal and wood. We store 80 gold bars on each of these pallets, worth millions of pounds. Each pallet weighs a ton, so about the same as a small car. Sometimes these gold bars will leave the bank, but usually we keep them secure in our vaults for many years.